Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Udayan Mukherjee is also with us. Udayan, good morning. First of all, Happy New Year to you. What would be your key New Year resolution this year?
Happy New Year to all of you and all viewers. Well, I don't make resolutions, but I think I read that Samir Arora yesterday struck a little bit of note of caution with you guys,
Yes.
and I think it's good to take that on board as we start 2018. Samir is generally bullish, and very rarely in the last so many years have I heard him talk cautiously, but I think it would be good for viewers to take that bit of caution on board. I'm quite cautious right now about the market, Anuj, as we start the year. That doesn't mean that the Nifty cannot run on further from here, but I think there's enough blowing in the wind to make us take pause and not get carried away from the successes of 2017.
You know, you're the 8th guy I've counted, Udayan, who is cautious on the market. We had 4 mutual fund managers at the end of the year, Nilesh, Naren, Munot and Manish Gunwani. All 4 of them were extremely cautious. And then you heard Samir and you heard Prakash just a little while ago.
That's a great sign, by the way, Latha.
Yeah.
That's a great sign.
That's exactly so. When so many people are cautious.
That's the most bullish thing that you can...
That is exactly what I was asking you. That's exactly what I'm saying. You know, there's so much caution in the air that do you think we are going to keep climbing?
It's entirely possible, Latha, that this happens, we keep talking about caution and the market grinds on to 11,000, which is why I also added that bit that the markets can run on some more. But, you know, everything is mean reverting, and I think the big theme for 2018, as I discussed last time, is probably the mean reversion of volatility as well. We've just got so used to 12 months of no volatility that we think that will continue indefinitely. And while our words of caution may fall on deaf ears for the market, I think this call on volatility might well come through because we've just not had it for far too long, and something will probably trigger volatility in the market once again. There are enough straws floating in the wind. We may disregard it right now because that's what happens in the throes of momentum. But I suspect that in the first quarter itself, Jan, Feb, March, it would surprise me. It may not happen, but it would surprise me very much if we did not get at least an 8-9% correction once in this market.
Oh, okay. Then hi, good morning, Happy New Year. So what is the tallest straw floating in the wind right now? What makes you most cautious?
You know, this whole, I mean, I think you'll have to come back to the bond market because, you know, this combination of the macro factors which probably is leading to some discomfort in the bond market will probably trickle down to the stock market at some point. Now, what form and shape it takes, we don't know. I mean, it could easily be through something else, that the fiscal deficit has gone out of whack and the government, to repair that, partly does something with the capital gains tax. So it might be a different route, but I think the genesis of it will be the slightly tattered macro picture or worse macro picture that we're entering 2018 with. Now, whether it happens through bonds, whether it happens through the bank nifty because of the pressures that are building up, whether it happens with a defensive measure or a preemptive measure from the government like touching the capital gains tax, that is difficult to predict. But I think the combination of circumstances with a macro might actually be something which the stock market takes note of sooner than later. The other point, Sonia, is that to note is that this year is the year of the litmus test for earnings, because the market has already taken multiples to a point where it's saying we've priced in earnings growth. Forget about expecting and hoping. It is in the price right now. So if in the next 4 quarters of 2018 we don't get growth coming back, we have a problem on our hands. And the problem is because both the fiscal and monetary bullets have now been spent. The government has no money to spend, and the Reserve Bank of India has no elbow room for interest rates. So we now have to hope that growth comes back, because if it does not, the medicines have all been given to the patient.
Okay. Then a word on the big rally in ADAG. Of course, it's been driven by Reliance Communication and selling those assets to Reliance Jio, but phenomenal move in some of these names.
Yeah, you know, ordinarily, Anuj, I would have said that that is not a promoter group we want to back, but, you know, it's the new year. I think everybody in life deserves a second chance, and so does Anil Ambani. So let's see what he does this time around. I hope life has taught him the difference between showbiz and biz. So this time maybe he may want to do things a little differently, otherwise he'll just end up like Vijay Mallya next time around. Maybe his surname has saved him this time. So I'm keeping my fingers crossed and hoping that he will probably get something right with the new businesses he's attempting. There are rumors about new partners he might get. He will do well to do that. But this is his last chance. If he messes this one up, there will be no second chances. The market's betting on it. I think there are a lot of traders flocking to ADAG stocks right now. Would I bet on it? Probably not. There are better promoters in India to back. But as I said, you know, everybody deserves a second chance.
Yeah, you know, actually the froth in the mid-cap rally is most in the leveraged stocks. Everybody who's in the NCLT is seeing 20% rallies. I mean, look at Castex, Jaiswal Nico, Videocon Industries. I'm counting the top 4-5 gainers at the moment, Metallist Forging, in the mid-cap 100. All of them are up between 5 and 7%, and they're all in the NCLT. It's not that easy to buy them up. And the PSU bank stocks who actually own them are not doing all that well. So do you think the blow-up will come here, Udayan, in the mid-cap, especially in the leveraged stocks?
You know, I can understand the temptation, Latha, of buying these stocks because some of them probably will go on to get a reasonable resolution with maybe a good buyer picking them up. And, you know, in 2 or 3 of them, you may end up making a lot of money. But, you know, it's like the classic tail wagging the dog right now. I mean, the leader of the rally for the last, not just 1 year, but the last 2 or 3 years, the Bank Nifty is showing distinct signs of softness. You know, this aura around the recovery or resurgence in PSU banks is beginning to wear off a little bit. The last few days, the price action of the Bank Nifty has not also been great. Now, if you tell me that the Bank Nifty starts to flag, but some of these small caps are now going to lead the rally, and one would have to be terribly worried for the health of the market. But, you know, these things are very difficult to time, Latha. You could have drawn a line on RCOM 30% lower, saying you got a great rally exit, and the stock goes up 30% more. So some of these will go on to rally so much that it's difficult to time the exit. But I suspect we are getting to a point where there is, as you said, visible froth in the market, and that should always be a little bit of an alarm bell.
The pre-open rates have now settled 42 points higher on the Nifty, which is what the SGX was also indicating.